What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Many of you guys have asked me. I have seen this on Robinhood forums. I have seen this on all the Facebook and social media forums. Everybody wants a piece of Hertz, the stock. Everybody wants to buy it. Everyone wants to get it. I'm going to give you my honest opinion. Again, I'm not a financial advisor, but this is a stock that everybody's talking about. It's on social media. It's about, this, that, these, and those. I put money in this. I put money in that. I mean, everybody's just, I just read this on, a lot of these forums, or stock forums, or penny stock forums about Hertz. And I'm going to give you my honest opinion and let you know if it's a buy. So again, if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Give me a like on this so that many other investors can see this. So let's look at its history. It is $1.24 a share. 2008 it was 70. It was right around $89. And 2014 hit. It was $102. Then it went down to 85, then 70, then 60, then it's going down, then it's going down, then it's going down, then it's going down. Boom. Okay, so let's look more information about Hertz. Let's look at its financials. June, okay, 5.11 billion. Operating income, okay. September, up. Net income, up. Net profit margin, up. December, up. March, boom. Okay, operating income, ouch. That does not look good. Let's compare it to maybe a rival. Guess it's related to this one, sure. Okay, so Chesapeake Energy is another stock that has taken a huge hit. So it's down 99.81%, and Hertz Global Holdings is down 97.71%. So almost 100%. So let's look at some information about just the news, okay? According to Morgan Stanley, Hertz is likely going to $0. So Morgan Stanley says HTZ. So, ouch. Morgan Stanley on Monday lowered its base case for Hertz for $0 to $2, citing risks of delisting or a potential liquidity shortfall. The firm's base case is now equal to its bears case. Morgan Stanley also lowered its bull case for Hertz for $3 to $8. Okay, does Hertz have a dividend history? No. What does NASDAQ say? No dividends. Okay, so $1.24. So it never gave off a dividend. So if you're a dividend investor, would you really want to take a risk on what is going on? Gee, Hertz tanked 23% on Monday. Oh my gosh, what a great investment. I don't know what's better, this or Sears. So let's look at this. It's in the middle of its bankruptcy process, dropped as much as 23% in the morning trading as investors come to realization that its speculative stock price is most likely over. Man, I mean, a lot of you guys that are penny, you guys invest in penny stocks. Why? I mean, why? Why do you do this to yourself? I mean, I made some mistakes. I mean, oh my gosh, I gotta read this one. Right now I'm going to be tracked. Look, I mean, I'm just going over some information. Let's go to some other things. I always go to Zacks.com. I mean, look, okay, this is why I dividend invest, okay? Look, so, basically this article, NASDAQ is just discussing, people going on Robinhood and they're investing in all these penny stocks, okay? And these, I mean, I'm just looking at like this, just all these articles, like investors on aggressive risk on approach and have no shame on losing it all. Well, I mean, what are you going to do? Throw $5 in? I mean, what do I don't understand people. I mean, when you study stocks, okay, now look at this. Okay, right here. So, Reddit's Wall Street Bets. So, one of the big things when it comes to investing in stocks, I mean, one of my things that I look into are, how is it done against the S&P? Does it give off a dividend? Okay, look at this. Hertz insolvency trade is a perfect example of this phenomenon. Hertz filed for Chapter 11 bankruptcy at the end of May, and the stock price surged almost $1,000 off its announcement lows, with small Robinhood investors being the primary drivers. Many of these users got this stock tip from Reddit's Wall Street Bets. So I'm going to listen to someone that has little or no experience in investing. I like to refer these people to, or refer them as gunslingers, okay? When you invest, when you're a dividend investor, this is why I do it, okay? This is why I dividend invest, because things like this will go up and give off a dividend, okay? Look, Coca-Cola goes up, okay? Just look at this. Just go on Google search your stocks. So the best way to do it, just hit a search, hit the max button, and then go from there. So I apologize, I'm a little bit tired. I just worked a crazy 12-hour shift, but let's think about this. You're actually getting something out of investing in Coke. I do invest in Coca-Cola. I do have them on my M1 Finance portfolio, but here's another stock that people love to gamble on. Sears, 18. I mean, look at this. Why would you even put money in this? Okay, look, can you imagine? Put money right there. I mean, that's just crazy, I mean, that's not a stable company. Here we go. Let's go back to Hertz. It's going down. Okay, it's just down. It's not. That's not a good answer anytime when you look at stocks. When they go down, okay, even if you're dividend investing and you study it, this is just crazy for any of you guys considering buying in Hertz. It's going down the tubes. You study the graphs. Just go on Google. Go on how it's done against the S&P, okay? Or just click it, see how it's done in 5 years. Do it to the max. Go to finance right here. Let's go to financials. Sure, it's down, but let's compare them to, I don't know, the S&P. Okay, now look, you're getting something out of this. Okay, sure, it's taking a nosedive. You're not getting anything out of this. Okay, sure, it's done well. Looked like it was beating the S&P. Then if you go in the past 5 years, as I refer to when looking at stocks, call it the gator chomp. If you have a gator chomp when it's going down and its competitor is going up or the S&P is going up, you're in big trouble. So I call this the chomp, the gator chomp. So it's opening up, the gap is changing, and there's just no coming back. Now look at here's another stock. Now here's a stock that's doing very well, and it is not doing a chomp. Okay, so anytime you look at stocks, I'm telling you guys, anytime you're a penny stock investor, and you see something like this against the S&P or a competitor, especially a competitor, if the competitor is kicking your ass, that's not a good sign. But when it looks like this, you see the gap just widening, just give it up. Don't even waste your time on it. I mean, that's my honest opinion. I mean, look, it's just going down. It's getting worse. So that's my honest opinion. And I'm going to give you my final answer right now. Okay, no answer. Pretty much, it's a no. It's a pretty much a given. No dividends. Is filed for bankruptcy. A loser is a loser. Look at the gator chomp right there. You can take the risk if you want to. You may lose a ton of money, and you're not getting any dividends. You're not getting anything out of it. At least if you invest in a dividend stock, I don't care if it's a monthly stock, PSEC, or I don't know, Capitella Finance. It's maybe going down, but at least you're getting something out of it. Okay, no dividends, you lose a ton of money, and it has not done well against the S&P. So those are my answers. Therefore, no. Okay, just stay away from it. It's the Black Plague. Stay away from it. It's just not. It's bad news bears. Don't try taking that risk. Sure, I've taken risks in my career. Investing in exercise physiology, which was not a return investment. When I changed careers and went into accelerated nursing, I put money in rich uncles and might have lost a lot of money, but it's good that I'm diversified. And I'm not really getting anything out of Hertz. Now, rich uncles took a nosedive, if you look at my previous videos, but really, I at least got some dividends out of it before the change in net asset value. And who knows what will happen? Hopefully, they'll keep the rate going, but we'll see. But I like my chances with rich uncles making a comeback over Hertz. I mean, rich uncles, they're in bad shape because the net asset value went down and the bricks rate. It was looking really good in the beginning. There's a ton of potential when they're buying buildings. Things were looking good, student housing, and then the bug hit. So it was like the doomsday scenario. Might have ruined a lot of people's financial dreams, but this one would. If you put $10,000 in Hertz right now, you might lose some money. So you might go down to $800. You might lose $200. You might lose $300. You might lose $400. It might go to zero. I mean, it's not worth the time. It's not worth the effort. It's not worth the energy to research. Just look at the gator chomp. Anytime you do the penny stocks, when one's going up, the other's going down, and that one that you're looking at is going down, it is never a good sign. So that's my answer. And thank you so much for watching this video. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. That is my stock analysis on Hertz. Honestly, if you buy it, it's going to hurt. So that's the best way to say it. So thank you again and have a good one.